Whenever I have a chat like this, when we're talking about the current market, I always want to reiterate the market moves in cycles. The types of clues that we're going to be looking at to deal with the transitions we're seeing on daily time frames specifically. I'll talk about the importance of a daily time frame. We're going to see these, and you're going to see these throughout your trading career. This isn't anything that's specific to this point in time. These transitions are always happening across multiple time frames and in multiple markets. You know, I'll tell you that transitional markets are probably some of the most difficult to have to deal with, no question about it. But I'll talk to you about different strategies you can use to deal with them. And I want to take you through what you have here on this screen, because one of the things that I'm trying to do more of is immerse you into more of what I would be doing for myself on my trading platform, which is viewing multiple time frames simultaneously. And I realize we're looking at a very small viewing area, but imagine your entire screen with somewhere between 6 or 8 time frames of the same symbol. It's going to make the way you scour the market looking for opportunities, it's going to really speed it up and make it more effective, because you'll be able to interpret multiple views at the same time. Now here I have a number of different pairs being shown at the same time. Okay, an option I could use instead. This is more of an execution page where I've got the Interbank FX terminal right on the screen, which makes life really easy. But when I'm trading, for example, a 5-minute time frame, like what you have in front of you right now, having that ready to go for such a fast-paced, short-term time frame is a necessity. You know, I might be looking at a buy here on this 5-minute time frame between this area here. I'd like to get long, say at 31.78, right now, right near the minor cycle level. And having this ready to go makes life very easy. I see 31.78 in the buy, and I can just click it and be on my way. But I also realize that for traders that want to slow the pace down a little bit, they might look at longer term time frames. So one of the things we're going to do right off the bat here is I'm going to keep the trigger here, my mini terminal, right here on the 5-minute chart. But what I'm going to do is I'm going to remove that expert advisor on the remainder of these time frames. And what we're going to do is we're going to look at multiple time frames simultaneously. So I love this Interbank FX link, this page here, that allows me to use a lot of the tools. But for now, what I'm going to do is just kind of put it up here in the corner and bring up a new chart. And we'll just put it in its place right here. And I'm going to remove that. And what we're going to do is look at the same time frame across multiple same symbol across multiple time frames. So let's go ahead and pull up the Euro US dollar across multiple time frames here. You can, and one of the things I'll tell you to do, which makes life really easy when you're doing this, is create a profile for each symbol that you trade. So what I'd like to have is the daily, the 240, the 1 hour, the 30-minute, the 15-minute, and here I have the 5. I like to color the 5-minute chart with something a little bit different, just so I can differentiate the fact that this is a time frame that is just for those very short-term trend following opportunities. The Between the Greens, for those of you that attended past webinars, you may be already familiar with that. We spent, I think, the last 2 months talking about that fairly actively, the Between the Greens setup, which, by the way, if you head on over to the Interbank FX YouTube channel, you can check that out. And let me give you all that link. It's www.youtube.com/ /interbank, spell it out, interbank FX videos, all one word. So that's the URL, www.youtube.com/interbank FX videos. So it's plural, videos. And that's the link where you'll find a lot of the playbacks that we've had here in the webinar room. I like to color my daily time frame, just a kind of an off-white. Old Lace usually does it for me. Just a slight different change. And it's funny how they look a little different on the screen. There we go. So I've got a slight blue here. I think this is cyan on the 5-minute, and this I think was called lemon chiffon on the daily. So the reason I want to kind of paint these in different colors, the daily and the 5-minute, is the 5-minute has a strategy all its own. The daily is where we're going to start to talk about these current trends in the market. And by the way, notice how I've got the daily, 240, 1 hour, 30-minute, 15, and 5 all in one nice little package, one nice little view here. What I'll tell you to do is go to your file drop-down menu, go to Profiles, and save it. So I'm going to save this as the Euro US dollar. So now I have this profile called the Euro US dollar. And anytime I want to take a look at the Euro US dollar across multiple time frames, I can. So let's blow up this daily time frame and talk about these shifts in the market trend and why it's so important. I think you have to start all your analysis out with the daily time frame because it is really, psychologically speaking, the most important in terms of what the dominant view, dominant opinion of that market is. So as I look at this daily, I'll notice a few things. Look at the grab candles. As of the last handful of trading sessions, the daily is reflecting a blue grab candle, a neutral market stance. And the blue grab candle is simply plotted when the close of the candle is between the 34-period EMA on the high and the 34-period EMA on the low. So it's inside the wave. And that's when it plots blue. Now, when I have enough blue dominating price action for a period of time, I will see that the wave will also flatten out and start to behave in more of what I call a 3 o'clock wave angle. So you notice the wave's kind of flat here. It's no longer trending lower. It's no longer really trending up higher. It's definitely flattened, significantly so. And because of that flattening, what we're seeing is a market that is not dominated by the bulls nor the bears. Now, here's a quick aside, because somebody asked me, why do I refer to that type of market stance as bullish or bearish? Why not buying and selling? Now, the reason I do that is because, remember, in the markets, when we're trading, I don't care if it's stocks, futures, forex, when we're buying, there's a seller. So there's always buying and selling going on simultaneously. Always. For every buy, there's a sell. For every sell, there's a buy. So for me to say there's buying, well, I could equally say there's selling. The direction, and most people say when there's buying, they're insinuating the market's going up. And when they say selling, they're insinuating the market's going down. But that's really, mechanically speaking, incorrect. It's the wrong verbiage. And to understand why that is, you have to understand the fact that there's always buying and selling for every transaction. It's the price at which the transaction occurs that dictates whether we're seeing higher highs and higher lows, an uptrend, or lower lows and lower highs, a downtrend. It's the price at which the buyer and seller agree to do business at, right? So there's always buying, there's always selling. So I don't ever want to say, oh, there's a lot of buying going on here, because there's an equal amount of selling. What the difference is the price that it's occurring at. So in an uptrend, we have equal amounts of buying and selling, but we have more demand. We have more people that are willing to buy. And therefore, the demand allows the sellers to dictate what price at which they're willing to let go of whatever it is they have. I don't care if it's a share of Apple. I don't care if it's a contract of crude oil. I don't care if it's a lot of the Euro US dollar. When there is more buying demand, the sellers actually have their way. Come think of it in a housing type market. When they say, oh, it's a seller's market or it's a buyer's market, what do they mean by that? They're actually reflecting who is in charge here, who's going to get their way, right? So when I say it's a bullish market, it's a market in which the buyers are getting their way. Absolutely. Supply and demand. You got it. You got it. So, think of it in those terms. Don't say, oh, there's a lot of buying going on here, because that's not the case. There's a lot of demand here. There's a lot of supply here. Demand meaning, really, in the most basic way, probably more buyers than sellers. In a situation where we have a downtrend, there's more supply than demand. There's more selling pressure than buying support. It's more bearish than it is bullish. Okay? So, and maybe that's just a pet peeve of mine, because I hear that, oh, there's a lot of buying here. Well, yes, technically yes, but there's equal amounts of selling, but there's a lot of buying demand, right? And maybe that's the English major in me and the semantics, right? But it matters, because it's the conversation I'm having in my head and how I'm reflecting what the market is actually telling me that it's doing. So what do I have here with all that being said and done? I really don't have a lot of buying demand, nor do I have a lot of selling supply or selling pressure. This is a market that neither the bulls nor the bears own. It's moving sideways because nobody really has an opinion that is dominating the psychology in the market. This is a terrible market to have to enter. And I don't care that it's the Euro-US dollar. I'm not poking at the Euro-US dollar alone, because I could say something very similar about the Swissy. Okay, so this is not just an assessment of what's happening on the Euro-US dollar. I could say the same thing on the Swissy. What I have here is no clear direction from an overwhelming amount of bullishness or bearishness. And why do I say that's so difficult? The daily time frames from a psychological standpoint, I'm not talking about being the most tradable. Okay, yeah, we can take a look at the cable too. Sure. Here's the cable. So the daily chart, the end of day chart, the closing price of the session is the most psychologically relevant, because it's the one that I believe the largest group of market participants use to gauge their opinion of a market. I don't care if it's stocks, futures, forex. That end of day, that daily chart is what people will use to gauge their opinion of a market. It's not going to be the 5 minutes, it's not going to be the 30, it's not the 240, it's the daily. So psychologically speaking, this has a completely different set of ramifications than any other time frame. Doesn't mean I'm going to trade it, but it means that I'm going to use the daily to assess what the biggest number of people think about the cable, about the euro, about the dollar Swissy. So are there quick bursts of bullish sentiment and momentum? We can see that we had a quick burst of bullish sentiment and momentum here recently on the cable. I can take a look at the euro-US dollar, also known as the fiber in some circles, and see that we really haven't had the same kind of organized bullishness in terms of sentiment and momentum, but we did have a quick little pop. Now it's neutral. And by the way, when I talk about sentiment, I'm just talking about what people are thinking in terms of their near-term opinion. Momentum is what comes from an organized sentiment. If enough people are thinking the same way, they can move a market. So thinking is one thing, action is another. So think of sentiment as the thinking, the opinion. The momentum is the action. So if I have bullish opinion, it could culminate into some bullish momentum. And if the bullish momentum organizes and is able to continue, it will eventually turn into an uptrend. So thinking to action to ultimately perhaps a trend, which is really the embodiment of organized sentiment and organized momentum, which is why sometimes you'll hear me say sentiment plus momentum equals trend. Do I have organized sentiment here? Do I have organized momentum here? I lack a trend, don't I? So if someone were to ask me, what's your opinion of the euro-US dollar? I could probably talk to 100 people, and the room would probably be somewhere split down the middle, depending upon their view of this market, whether it be a fundamental view, whether it be maybe a set of indicators, but there's probably not an overwhelming majority of people saying either bullish or bearish right now. I say there might be a little bit more bearishness because of what we've done over the past year. I'd say there might be more bearishness based upon a fundamental tact, right? But right now, if I tell people this price, 31.90, what's your opinion of the euro US dollar? Is it going up or down from here? I'd probably get split down the middle. And that tells me that how people will position themselves in the market is going to be more difficult to assess than, say, a very clear trend like the dollar yen. I talk to anybody about the dollar yen. Here's a daily time frame. And I talk to that same group of 100 people and I say, where do you think the dollar yen is going to go from here? I'd say a large majority of that room is going to say it's going up. There might be some top pickers. There might be some counter trend traders. There might be some traders that are using some fundamentals to say that, yeah, the yen could stop weakening and start strengthening against the greenback. There might be some people saying the dollar is going to get short and therefore allow the yen to gain against it. There might be a whole myriad of reasons that someone might say we might see some significant weakness. But I would say of those 100 people, most of them are going to say, yeah, we're probably going to see support and higher highs. And that means that on a pullback, what do you think traders are thinking? On a pullback like what we're seeing right now, in a market that is trending, what do you think traders are thinking? I'd say most traders are looking for a way to position themselves long. It's been my experience that within the context of a trend, traders will typically say, yeah, I wouldn't mind positioning myself at support because I think that the market's heading up higher and that this move lower really is, in a very basic way, in a raw way, this is the dollar yen on sale. Let's stock up. That's kind of a stock trader's mentality, but it's the same thinking. It's the same psychology. The move lower within the context of an uptrend is an opportunity for bulls to go, you know what, I'm getting some price improvement here. I get to get long at the dollar yen from a lower price. And they'll probably step up. Now you can see right now, we're pulling back to a 20-period simple moving average. The 20-period simple, the 50-period simple, the 200-period simple, all in the close are very well watched, well followed moving averages, and in and of themselves, because of that, they really can act as very powerful support and resistance. Right now, we can see the support at that 20-period simple. And this, actually, for those of you that know the mechanics of my swing buy strategy, know that this is an aggro entry on the dollar yen. It's an aggro entry. In fact, right now, most of my trades are still predicated on a belief based upon the strength in U.S. equities, based upon really the lack of any kind of direction on the dollar, just kind of gravitating around the 80 level on the U.S. dollar index, okay, that we're still in more or less a risk on the table or risk appetite type environment. In other words, it's more of a greedy environment than it is a fearful environment. But I've never seen an uptrend like we've seen on the U.S. equities market, NASDAQ, S&P, or Dow that has been more pessimistic. I've never seen a market climb in such a pessimistic environment. No matter what it does, there's always somebody saying, yeah, well, this and that, this could be the end of it. I've just never seen so much pessimism surrounding a move as prolonged and as strong and as healthy looking as what we've seen on the Dow. I'm not saying that we're going to go up forever, but I'm amazed that as this market is trying to test the support at 13,000, there's still so many naysayers. Why not just follow the trend? When there's a reason to get bearish, we'll see it. There'll be stages under which a correction or a reversal in equities will occur. But in the meanwhile, I have to reflect, my trades have to reflect, especially with the yen pairs, that strength in equities. Whether it be the dollar yen, whether it be the euro yen, my trades still have to reflect that strength in equities. And what's interesting about the yen pairs right now is, for the most part, they do. We're having a stronger correction right now, by the way, in the Aussie yen, but there's no question that this is still a market that is more bullish than bearish. Although we're getting our first blue grab candles right now, we're seeing the first really pronounced sign of weakness. in this market, but this is still very much, and actually I don't have the 50-period simple in here, so let's go ahead and put that in here. That's a really nice moving average to have. 50-period simple on the close, and I typically shade it like a darker gray, although I don't need it to be anywhere near that thick. There we go. So that's what's happening right now on the Aussie yen. There's that 50-period simple. So in terms of markets that are trending relatively healthy right now, another one that was trending really nicely, this was in a downtrend, was the Australian dollar, Canadian dollar. Actually, this one came up when I was doing a morning chat, and somebody asked me about the Aussie Canada. I said, wow, I haven't traded this one in a while. And we went through the whole process of looking at the power stats to get an idea of the price movement range. I was showing people how it's best to get to know a trade get to know a pair before you trade it. So we went over to power stats right through the IBFX platform here, went over to IBFX.com and took a look at the typical spread, so we knew our cost per entry. We did all that, and then I finally said, yeah, this is a little higher cost per entry than, say, some of the majors that I'm used to trading, but the trend is down. In a downtrend, could I say, for the most part, that the psychology is bearish, and that on a bounce, traders are going to look for opportunities to position themselves at levels of resistance? That if I take a buy entry on a downtrending daily time frame, that it is indeed counter trend. We hear words like counter trend all the time. Counter trend, contrarian, trend following. That doesn't mean anything unless we first assess what's happening on the daily and have a basis for what it means to be counter trend. Counter what trend, right? Contrarian to what move? Trend following of what direction? What time frame are we going to use to assess that? And I believe it's typically the daily. So if somebody tells me they're counter trend the euro, my first response is there is no trend on the euro. Not on the daily, and certainly there's no dominant psychology ruling this market right now. Now, there may very well be some sort of downtrend on a 5-minute or 15 or 30. Sure, we could see an intraday trend, but that's not a dominant psychology. This is a market that's in transition. This is a market that's moving sideways, and because of that and that alone, it's much more difficult to gauge what the response is going to be in terms of a move higher or lower and how long that could continue. Because on one hand, I've got to respect the fact that I've got a range here, and that as I get to the range highs and range lows, let's go ahead and put in this resistance level here. As I get to the range highs and range lows, that there's a chance that we're going to exhaust. Okay? So I need to respect that. That's one reality of a market that's in a range. But I know that sentiment could shift near the bottom of the range. I know sentiment could shift near the top of the range. But what happens when it's inside the range? What happens when it's smack dab in the middle? What are the largest group of traders going to think? I could put a stochastic in the market and help me gauge that, but it's very difficult to deal with a market that's stuck in a range. And the way we respond to that is by going very short term, 5, 15, and look for the clarity as we trade within the extremes of the high-low, the channel, if you will, that's on the daily. And I think if you look at, and here's maybe a little bit of homework for you all, I think if you look at your trades and you look at the pairs you're doing very well in right now, depending upon, of course, on your strategy, I think you'll find that typically you'll trade better, regardless of your strategy. You'll find more success in markets where there is a dominant psychology. In other words, a trend on the daily time frame. I know right now my more successful, my more clear and more confident approaches. In other words, the trades that I feel the best about happen to be on charts that have a trend on the daily. I don't care if it's up or down. I don't care if it's a downtrend on the Aussie Canadian dollar. I don't care if it's the uptrend on the euro yen. Right now, when I look at, say, the euro yen and the pullback we're getting, Let's take a look at that daily chart. Here's a pullback to the 20. That's an uptrend. Contrast that with the downtrend that is the embodiment of the correction. You know, how many times have you seen someone get into an argument about a trend of a pair? Someone says, oh, you got to be short the euro yen right now. And someone else says, no, you got to be long. Could the disagreement not come because of the pair itself, but rather the time frame that the individual is focusing in on? I'll say that right now, there's a good justification for short-term traders to be either scaling out or looking at short trades on a 15-minute chart of the euro yen, while longer-term end-of-day traders are positioning themselves at a buy at the 20-period symbol. Same pair, two different directions. Both have merit because the short-term correction is exactly what that longer-term trader needed to get to their support level and enter long. So a lot of times people want to kind of play Red Sox Yankees about rooting for what pair is doing what, when in reality sometimes it's doing both, and it's the time frame that differentiates why a certain psychology has merit, near term versus longer term. Now I will say, with the uptrend in the euro yen, any short trade is counter trend. You're swimming upstream. And therefore, because you are trading counter the dominant psychology, which is bullish, you should keep counter trend trades. Again, when you have a trend on the daily, keep counter trend trades limited to the 5, 15, 30-minute time frames. You can absolutely get short when there is a dominant bullish psychology, but just don't do so in a longer-term time frame where you are then expecting longer-term organization of sentiment and momentum against that dominant thinking. Why would I want, if I can swim upstream for a little bit, that's fine. But if I have to swim upstream for a longer period of time, at some point I'm going to fatigue, and the markets work the exact same way. Okay? So the danger here in markets that are not trending, like the Swissy, like the fiber, like the cable, is that we can't look at it and say, well, as we're trading in the middle of this range in the cable, what's the dominant psychology? I'll retreat to the shorter term time frames looking for some sort of near-term organization of sentiment and momentum to give me an opportunity to trade the pair. Or what I've been doing personally is I really haven't been focusing in on those markets that are moving sideways. If someone were to look at my activity right now, the way I'm viewing the markets, I'm really, on the back burner sits the euro US dollar, sits the dollar Swissy, sits the cable. Okay? The Aussie and the Kiwi have a little bit more of my attention. They're in a different kind of transition. Rather than moving sideways, they're actually trying to break previous trends. They're in what I call a rollover scenario. They're trying to roll over. See, the Aussie is not moving sideways. The Aussie actually has more bearishness. Look at the red grab candles. Look at how the wave itself looks like it's rolled over, almost like a rounded top in terms of the wave itself. And the moving averages that I have on this chart, by the way, for those of you that are curious, again, 20, 50, 200 period. 20 is in that light gray, 50 is in that darker gray. The black is the 200 period. All simple, all on the close. And then, of course, I've got the 3 lines of the EMA, 34 EMA wave, 34 period on the high, 34 period on the low, 34 period on the close, all exponential. That's the green, blue, and red lines on the chart. Notice the difference between what I see here on the Aussie US dollar and what we see here on the Euro US dollar. It's a very different type of market. This is a market that's basically moving sideways, more neutral. Look at the blue grab candles, look at the flatter 34 EMA wave. Contrast that with what we see on the Aussie, or even the Kiwi for that matter. More red indicates more bearishness. The angle of the wave is suggesting more bearishness. This is not a sideways market. This is a market that's rolling over. So while I may not have an established trend quite yet, we clearly have bearish sentiment and momentum. Clearly. Okay, I can look at the Kiwi. And the Aussie is quite weak today. It's actually very weak today. Here's the Kiwi. weak, but not as weak as we're seeing in the Aussie. The Aussie's pushing the newer lows. The QE is kind of holding pat. So we see a rollover here. We see the bearishness, but it's not the same type of transition as we see on the Euro-US dollar, dollar Swissy, and the cable. This is where I can be a little bit more bearish. I can have a little bit more of a negative tone to my trades because this is the beginning of what could be a downtrend with this bearish psychology representing the grab candles, bearish sentiment, bearish momentum. So when I go intraday, I'm going to be a little bit more comfortable with shorts. I'm going to be a little bit more comfortable on shorts across multiple time frames because, well, I know we haven't organized long enough to yield a trend on the daily. I do see a clearer psychology here. Do you guys see the difference? There's a much clearer psychology on this Aussie US dollar than on the Euro US dollar. It's not as clear as, say, what we're seeing in terms of the uptrend on the dollar yen. That's much more of an established trend, or even the Aussie Canada. Again, that's much more of an established trend. But we can certainly see that while we lack a trend on the Aussie US dollar, we're not lacking opinion. Three different views: trending, flat, transitional. Now we have two kinds of transitional markets. We had a Euro US dollar that's basically transitioned into a flat sideways range. Here we have a market that's transitioned into more bearish sentiment and momentum. Do we have any questions? And is the daily open price, I have a question from Conrad, is the daily open price taken into consideration? No, I really don't look at the open, Conrad. It's really a high-low close with emphasis on the close. The open is the first opinion of the day, but it's not what people will psychologically cling to. The close is much more important, and the high-low range kind of shows the extremes of the psychology, but I find the open is probably of the four the least important, unless you have a trader who is a big fan of gaps, but that's not really something we do in Forex a whole heck of a lot, right? We only have one open per week, so gaps aren't a huge part of a strategy. If you talk to a day trader, an equities or futures day trader, the opening price, especially for traders who like to trade the clearing, is pertinent, but I don't think in the Forex world open has that much importance. It's probably the least important of the four, and it's not something I think is that applicable to what we do here in this environment, the Forex environment. Any questions? I'll wait for you guys to type them in. But that's really what I want to get across to you all. When you start your analysis, do you understand what the dominant psychology of the market is? And we've seen a couple different views here. So if you find that you are struggling with a pair, ask yourself, or if you're struggling period with your trading, ask yourself, have I looked at the daily? Am I dealing with a market that doesn't have a dominant psychology? And if I'm struggling with that, maybe I need to start looking at the daily charts that are in a trend, or at least are rolling over and indicating some sort of clear psychology, like what we just looked at on the Aussie US dollar or the New Zealand dollar US dollar. My suspicion, just from talking literally to hundreds of traders face to face, teaching thousands of traders around the world, my lab, if you will, right? My experimentation, this worldwide lab has told me more often than not, probably close to 90% of the time, struggles come in pairs that lack a dominant psychology on the daily. Because at that point, what traders will do at support and at resistance is less predictable and certainly less clear as when there is that dominant psychology. So ask yourself, assess the pairs you're trading right now. Look at those dailies and say, wow, maybe I've been getting my butt whipped by that cable or by that fiber, or by that dollar Swissy. Maybe that's why. Oh, I've been doing great on those yen pairs. I've been doing great taking advantage of Aussie weakness against other currencies. Likely because the Aussie's in a uptrend, because the yen is in a downtrend. I'm sorry, the Aussie's in a downtrend weakening, the yen's in a downtrend weakening. So, great question here. Brad asked, do I focus more on certain pairs during the day when the banks are open in that country? That's a great question, Brad. One of the things I try to do is I do think about that. But rather than just kind of anecdotally wondering what the situation is, what I can actually do is go to the Power Stats. And by going to Power Stats, I can pull up a chart of, and let's see this, a chart of what we call the price movement per range. We've spent, actually, if you go to the YouTube channel, we have a dedicated webinar to that. And you can see the rhythm of the trading day, the volatility at certain times of day. So I do look at pairs in that regard, but I use Power Stats to gauge that, not when they're open. Because a lot of times you would think that the yen, the Aussie, and the Kiwi would be very, very active during that Asian session, when in fact they're not. And it depends on what currency they're trading against. The Aussie Canada, believe it or not, is pretty much steady through the whole day, and it actually is quite viable and volatile during the Asian session. The Aussie Canada, who would have thunk it? So if you go back to Power Stats, and you can contact customer support at ibfx.com, and they'll show you how to access that if you've never done it. I use that rather than anecdotal evidence and rather than coordinating it with a bank, because it doesn't always coordinate the way you would think. So I can get not only a better rhythm of the day, but I can get specific price movement ranges by using the Power Stats. So terrific question, Brad. All right, got another question you're asking, is the Between the Greens the same one I posted? Yes, yes. Anytime you hear me talk about Between the Greens, the more recent webinars will have more recent examples, but it's the exact same strategy that I've been using literally for like 10 years. Absolutely. Thank you for that question. Exact same strategy. Between the Greens will always be the trend following intraday strategy utilizing the 13, 21, 34, and 55 period EMA closes. Thank you for that question. Okay, we've got a question here. I trade the 30-minute Euro US dollar and use a 15-minute and 1-hour chart and an alligator setup. 963 with grad. Should I open to a day? You know, again, Joe, what I will tell you to do, and again, everyone might have very different setups in terms of how they specifically trigger a trade. But what I'll tell you to do is, before you set all that up, just at least ask yourself, am I having success doing that in a market that does not have a directional bias? And am I having more success doing that with a market that does? So if you were setting up a trade like that and say the dollar yen, you know, is that trade one that capitalizes on exhaustion? Because if you are looking at an exhaustion type strategy, the Euro US dollar is probably a better bet. If you're looking for a strategy that might be trend following, or if you're looking for a little bit more follow through, you might be better off trading some of those yen pairs. So I'm not sure what that strategy capitalizes on, Joe, but if you ask yourself, what is it that I'm trying, what environment was this setup meant to thrive in? Range bound or trend following? Perhaps it's a trend reversal, exhaustive, I'm not sure. Once you know that answer, you'll probably be better able to determine when the daily is moving sideways or trending, if it's going to be a better scenario for that strategy. I hope that answers your question there. Okay, so let's see. I have a question from Gio who asks, when looking at the daily chart and trading a 15, 30-minute time frame, does it really matter? Absolutely. I still think it matters, because if I'm trading that 15 or 30-minute time frame and I'm going counter trend, I want to be very respectful of the fact that if I'm reaching some sort of significant support level on the daily, that 15 and 30-minute chart could begin to show signs of weakness. So I don't want to take a short-term time frame out of the dominant psychology. Does it matter less? Well, look, on a 15 or 30-minute time frame, you're looking for organized psychology for maybe a session for a few hours, right? You're not looking for a longer-term multi-day trade. They're not designed to capitalize on those. Not typically, unless the trend is very, very strong. So I do believe it matters. I absolutely do, because I think we must always be respectful of whether or not we're trend following or if we're entering a counter trend trade. So I do believe it does, Gio. Yes. Okay, got another question here. On the Euro US dollar, I see that the daily is currently ranging between the 38.2 and the 23.6 Fibo of the last major move. By dropping down to the 1-hour chart, would it be okay to trade the bull? Let me see. Would it be okay to trade the bull? Okay, so since we're in a range, you know, what I will tell you to do, if you're going to trade the range, one even as narrow as this, my suggestion would be to go maybe even more narrow to, you know, here's a 1 hour. The 1 hour is a little bit more bearish So if I'm going to look for range-bound trades or trading within a range, my suggestion is go to a 5, 15, or 30. That would be my suggestion. Go to even a smaller term. I understand what you're going there, what you're shooting for, and that's cool. You got a range and you want to play maybe within it. If it's a narrow range, the narrower the range is, probably the shorter the time frame you really need. And don't ignore the individual market trend that those shorter term time frames are in. Because if I look at that 1 hour right now, I'm actually positioning shorts at pretty much the current level. I'm looking for a short along that 34 EMA low and looking for maybe a push lower towards the 3150 area. So I've got no problem with intraday time frames when we're stuck in a range, but again, my preference is to go shorter term. Be more nimble about it. Be more nimble. Those shorter time frames are more nimble. They're going to be more sensitive. Use a short-term time frame for what it was meant to provide to you, which is a near-term slice of psychology, near-term opinion. Don't demand that a 15 or 30-minute time frame allow you to pick up on a larger trend over the course of days and days. It's not designed to do that. Maybe a 1 hour, maybe a 240, certainly a daily. But the 15 and 30-minute time frames, I think, are really good for a session-to-session type approach. So that's the way I view them. That's the way I view them. So, all right, well, that's the presentation for today. So thank you, as always, for making time out in your day. This video, along with the other presentations, will be available at the Interbank FX Videos YouTube channel, probably within a week or 10 days or so. So again, thanks for joining me, and I will see you all in the next presentation.